Hello traders, Gary Wagner with the Gold Forecast here. Approximately 10:45 a.m. in Honolulu, Hawaii, Tuesday, the 2nd day of August, and this is the daily report for gold. And oh, what a day we are having. Obviously, current new record tops. Market is just off the wall. Currently trading up, I believe, $35+ on the day. The key is 1657. This is our cash market. And as you can see by looking at our daily chart, this is today's price movement. A tremendous move from about 620 just below to a high, intraday high of just touching 1660. My God, what a day in the market. Considering the fact that most analysts last week were looking for mainly lower prices, the gold market shows that it has a will and mind of its own. Now, when we look at this chart, the one thing that impresses me more than anything else, and we talked about this, that typically this market, I think we're going to be witnessing one of the greatest rallies in history right here, but as it came up, period of consolidation. That's that $1,600 benchmark. What does it do? As I believed, it would probably flirt, and I believe the way I put it and the way I interpret it is major benchmarks like that typically aren't accomplished in one battle. So you had the area in which it consolidated. From there, it moved to its next target level. Next target level, 1620, right in there. Once again, a period of consolidation. And then today, an absolute, utter breakout to the upside. So traders, targets, we are in roughly $100 plus from our first position and approximately $60 plus from our add-on. What am I looking at from here? Well, let's go back to our original targets and see how they fit into what we're looking at. And the first thing that we can see is that our initial target that we were looking at, as the market came down and retraced, that's right in here, our initial market was that band that from 1614, 1609, right in here. That was that 50% extension. Realize, in record territory, we simply can't use anything but timing sequences and extensions along with the candlesticks and the Henkin, but really it's extensions that are giving us these targets. And our next target, of course, was 47.41, and I think we can see that it's blown that really through the water right in here. But what I want to do is see what kind of follow through we get. The other thing we want to do is by removing our Henkin from it, we get a much clearer idea of what we're looking at and what I think we will see over the next few days. And this is what I'm looking at. My sentiment is, just as we saw this market, as you can see, it forms a base at this one harmonic level. It forms a base at this Fibonacci retracement after correcting, reaching that high right in here. This is that 1610, comes back down. Now it's burst above this particular target and done so with a vengeance. And that's the thing. My upper end of the target, 1647, it's $10 above that right now. So that my sentiment is, of course, our next target's going to be 1680. I do have targets above that, but I really didn't see the need to express them yet. The market was so far away. We will start putting those up this week, without a doubt. But the one thing that I want to say is that when we look at this market, we'll have to see, but my gut tells me that we'll start to form some sort of a base right in here. It could continue to go higher. When we look at the trading activity that started this rally, it was day after day after day of higher closes, these green candles, these up candles. But I would think that we would probably get some sort of backfill, meaning that we will get a marketplace in which it consolidates, forms its base right in through here. And then my belief is that we're either going to see the market correct or go to the next level. The next target, of course, is 1680. Oh, what a difference a day makes. Our weekly chart. If you recall from yesterday, we had that small-bodied candle on our weekly chart. It was also red. absolutely certain if we convert it to a Henkin chart, we're going to be in straight green territory. But we also want to see that not only that, but the strength of the candle itself bases a weekly chart. So I'll go ahead and put that up for us. And as you can see, this is in Henkin format, our weekly chart. And what is quite apparent, and traders, now that you have been following the techniques that we use on this newsletter, it should become quite evident to you. We have our consolidation there as our pivot point, our doji candle, of course. And if you notice, 1, 2, 3, this is the 4th straight week. Lack of tails, very nice size body size. And in terms of the trend itself, you can see when it begins to weaken, those body sizes begin to close up. They begin to narrow. You can see that in here. You can see that in here. And you can also see as that market is going to continue to trade higher, we typically get these large body sizes. All of those factors seem absolutely true today. And for the last chart of the day, this is our interim term, our short-term Elliott wave count. Realize within the short term, there's a minor count, and then there's also a sub count, and then there is the major counts above this. But I can say with most confidence and certainty that from 4, we are in a intermediate 5. There's no doubt about that. I've labeled this as 1. I have another chart which goes 1, 2, and puts this as wave 3. That probably would be a logical assumption. Now, based on that assumption, based on the assumption that what we have seen is a 1, a 2, and we are now going into 3, one of the easiest things we can do in terms of a Elliott wave technician is we do use wave 1 as our benchmark. And wave 3 cannot be the smallest of any of the impulse waves. That being said, by looking at the relative size and simply taking that line, which is this, we want to verify that it's an auto scale, and by putting that at the bottom of our beginning of wave 3, and you can see that this potential target takes us to 1710 at this point as I believe, a strong possibility for this next wave in the market, wave 3. It's taken all of the original assumptions I had in terms of where I thought the market might go, and it has added, because this wave 1 is so dynamic, and the fact that wave 1 is so critical in terms of its being a benchmark for our other waves to follow. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.
When I look out my window, many sights to see.